So in this week's weekly market review on the stock market side, we're going to be looking here at the S&P 500 always to begin. So let's get into it. So as you can see, last week we were bumping up against this upward sloping resistance line here. Get rid of that. And if you look on the lower time frames, let me bring that up. So jump down to the 4 hour. You can see pretty clearly we are testing, or had been testing this as resistance, and then subsequently broke below it quite aggressively. I think that was FOMC meeting on the 1st of May. Not 100% sure on that, or maybe it was this day here. But anyway, the technicals show, yeah, it's looking a bit weaker. You could say this is a head and shoulders pattern starting to form, so something to be aware of. So this would be the left shoulder. Whoops. This would be the head, and right. Well, here would be the right shoulder, but it's looking a bit powerful. But at the same time, this is Friday, so this could just be a quick squeeze. No one really wants to hold over the weekend in case there's, you know, weekend risk. So that's one thing to keep an eye on from a bearish standpoint. From a slightly bullish standpoint, we could, you know, this is Thursday, got a nice doji candle. Friday, nice bullish engulfing type of candle. So we could expect to see this possibly have a similar type of candle breaking out here. If it does start to break out here, there'll be those stop losses in and along here, which could cause this to spike higher to that key 3000 level, which we've been covering for months now. If that is the case, yeah, I would watch this 3000 level, see what happens here. I think this could be pretty important as to what happens going forward for the next, I don't know, next few months. Any rejections here, I'll maybe start to change my bias slightly. So there's a few key things I'll be looking for and covering in the blog post this week and going forward. Apart from that, not really much else I can see on that market. Nothing there. Oil starting to break it down again out of this pattern here of a channel pattern. So remember, it bumped up, as we covered a few weeks ago, up against this area of former support, turned into resistance. Now we're breaking down below this quite strongly, and yeah, it's looking like it's looking pretty weak at the minute. So need to watch a couple of key levels, 60 being one of them, and if that breaks, we'll sort of need to watch down here as well. Yeah, that's pretty much it for there. Lithium started to look a bit weak over the past couple of weeks, as we've been covering, but it's starting to rebound slightly, which is nice to see. Again, still above this very key level here of 26. So as long as that remains intact, I'll have a reasonably firm bullish bias upon this market. Bitcoin, not an awful lot happening here. It did squeeze towards the end of the week. We're back into the 6k level. Oh, but we're not at 6k just yet, but you know, this zone of former resistance, support, and we could be retesting as resistance again. So it could be an area to watch for if any weakness, any signals, you know, any sell signals that come in. You could possibly say, so remember, similar to the S&P, we could have a bit of a rejection of this trend line here. So we've got 1, 2, 3, 4 touches. So yeah, one to keep a very close eye on. Ripple's doing nothing. Gold, it's not really done very much since we've been covering, or since this sort of way back here. Even when we did the video of it rejecting this level here, it did come down very nicely. It formed that head and shoulders pattern. We are retesting the neckline, started to drop down from it, and we're actually holding it. It's not making any lower lows just yet. But yeah, this one still isn't looking, I wouldn't have a bullish bias on it just yet. I still remain bearish for now, just because of this overall pattern here. Uranium, nothing different from last week, so there's not much more to go on about it. Tesla, Now this is our stock. We'll just keep it on for this week. This is our stock. Remember last week we were saying we could see a pretty decent bounce here from this zone. I think the candle was, yeah, it was this candle here. Came into this zone. We bounced a little bit, came back down, then bounced harder. And yeah, closing Friday at roughly 254 from 233s. So yeah, it's nice idea. Covered this in the blog post as well, and I watched this, and yeah, really nice. And even last week's breakdown on the video, I think we covered it pretty well. You know, we've seen this as a potential bounce and reversal, because former support here going back all the way back to 2014. So yeah, it's pretty important, this level. And now that earnings are out of the way, the technical side can begin to take force. And yeah, so bit of a fallen wedge type pattern here as well. If it starts to really respect this pattern, we could possibly see a more significant bounce. And if that's the case, you know, it's going to trap a lot of shorts who have been shorting this for, oh well, pretty much since 2016, 2017. It's just a really aggressively hated company for some weird reason. I'm just trading the patterns here, and that's what I see. So yeah, just wanted to keep an eye on. No other stock of the week that was really of that much interest, so just covering Tesla again. And we'll come back to it next week and see what's happening and go from there. So hope you enjoy this, and we'll see you in the next one. Thanks.